So first of all, I will give you some introduction about the paper. So this is an AAT paper, CPT, P04 corporate and the personal taxation. So this is a kind of a very important subject for your day-to-day life as well as for your examination, because it's the sometime the most of the students, this is the very first time that you learn about this taxation in your professional examination or other academic, right? Most, not most, right, but some of you. Here, I just simply explain what is the paper structure. Paper structure. So this paper, the content consists of three sections. There are three sections. So hope you all can hear me. So any students, can you hear me? Please let me know whether I'm audible or not. Am I audible? Okay, no one responds, so I
Yes.
think
Yes, sir.
yes. Okay, okay.
Yes.
Thank you very much. Right here, that there are three sections, right? So in the paper, there is the paper structure, right? Paper structure. The knowing the paper structure is the very important when you are get ready for your examination. So there is only 2 weeks, right? There are only 2 weeks. Now, then tomorrow is 1st of February. Then your exam will start 10th of February, and the 11th is the date of the examination for the taxation. Right? So, however, then you have to approximately 2 weeks. They actually, then what I believe is, so if you are hard work, if you are contribute the fully this 2 weeks, then you will be able to get through this taxation subject, right? So, but I will not tell like that you can earn that means the subject price. So it is not possible, but you can pass the subject if your commitment is there. So there are three sections. So section one, sorry, section A and section B and section C. So you all can download the particular paper. That I have prepared a paper and shared with the vLearning team. Then vLearning team already upload the paper in vLearning platform. Hope Miss Nadisa, isn't it? So student can find
Yes.
the yes.
Yes, sir. We
Okay.
have uploaded it.
Yeah. Thank you very much. So therefore, then you can download that paper. It's better download. So then here you can see there are three sections. Already you know, right? But I will explain a little bit if there is anyone who not aware about the paper structure. So the section A consists of 4 questions. There are 4 questions. Right? 5 marks per each. Then you will receive the total 20 marks. For the section B, there are 3 questions. There are 3 questions. Then 10 marks for each. Then you can earn 30 marks. So section A and B, you can total 50 marks. So section C, you know, there are only 2 questions. 2 questions and 50 marks. 50 marks. Right. So here, the what are the testable area in the section A? Section A, you know, guys, the residence status. Residence status. So calculation of the residence status of an individual, determination of the residence status of an individual and a company. Definitely this question will be there as an question number 1. So thereafter, you know, the case law. There are some particular case law. Then case law also, the Rajapaksha versus CIT, Mahavitarna versus CIT, Cribb versus CIT. Then there are other Haley's company versus CIT, right? Likewise, there are Dowd Boy was right. Then this the last time they test the Dowd Boy case, right? So likewise, you can get ready for these case law. Definitely there will be an fiction, right? So in this time, you have to be very careful because the SSCL, definitely SSCL will be there. SSCL, social contribution levy. So the social contribution levy should be there, right? Social contribution levy. So the next one, then there may be some fiction from tourism development levy and share transaction levy. So excise duty, but the excise duty there is a the less, that means the probability is very low. But the TDL and the STL already tested in 2 times, so there may be some possible. So then the um, stamp duty, what are the specified instrument which need to pay the stamp duty? So way of payment of the stamp duty. So a small calculation regarding the receipt and particular deed. So these things can be tested in the section E. So section B, the definitely it can be test what? The VAT, definitely VAT, value added tax and SVAT application. So as a second part, the partnership. These questions are definitely there will be, right? Then tax administration. Tax administration. So under the tax administration, appeal, objections, then the payment, how you can, the way of the payment of the tax, there are 3 ways. The one is the withholding tax, other one is the installment, other one is what? Assessment. As an installment payment, there are 4 installment per particular year of assessment. Then you need to pay quarterly. Neither. A quarter payment you need to make on or before. When? End of the 45 days from the particular quarter. That means the within 45 days from the end of your particular quarter, you need to pay that quarterly payment to the Inland Revenue Department. So that's the application. So then the penalties, then tax default. Then what are the actions the Inland Revenue Department can take, right, against the tax default? Likewise, there are some specific things need to be discussed under the tax administration. There will be definitely 10 marks question in your exam papers. Therefore, please be ready. The calculation of the installment, likewise, right? So, who are the authorized person? Right, authorized person. Likewise, you can learn this. Some of the definitions like that. So, section C, obvious there are 2 questions. The question number 8 and 9. There are 9 questions in your exam, right? There are 9 questions. Altogether, you can see the part. That means the section A4, section B3, altogether 7, and the section C2. So section section C consists of the question number 8 and 9. The question number 8 is a company tax. Company tax. So other one is individual taxation. That means tax computation for the individual. So is there anyone who purchased vLearning package from the JMC? I could see some of the messages in the WhatsApp group, right, regarding the tax, the changes, required changes in the there are 2, Senadi or Senadi, right? Givanti. Yeah, there are many. Nafla was there. Nafla is also there, right? Many. Right, Sasiru, there are many, right? So, however, then if you have any questions, then you can ask, right? Doesn't matter, right? During the seminar, after that, you can ask any questions, right? If you have any doubt, then you can ask, right? So don't worry, then you can disturb to me and ask questions. Right. Here, this is the structure. So now you have idea about the paper structure. So this is the prepared paper. So in this case, you can see there are 9 questions. Question number 8 and 9 consist of 9 for the employment. Question number 8 for company. And section number 7 is VAT and SWAT. Section number 6, partnership. Section number, sorry, question number 5. I forget to tell that. Right? So in this section B, there is a high possibility to test capital gain. Capital gain. The capital gain means the gain from the realization of the investment asset. In simply, if you earn some gain from the realization, that means the selling. The realization is the broader concept than the selling. But in your stage, it doesn't matter. I then think that the realization means a selling, right? If there is any gain from the selling of the investment asset, then you can earn some gain, that or the gain or loss, right? If there is a gain, then you are subject to pay the particular tax that called as capital gain. The capital gain tax on for the company is 30%. That is the tax rate. But other than the company, the all other persons, including the individuals, need to pay 10% out of that capital gain as a tax. So when you need to pay that capital gain and when you need to submit the tax return, so both tax payment and the return should be submit on within 1 month from the end of a month of that realization occur or that happen. Right. So then in this case, you can see then I will discuss how we can calculate the capital gain and what is the tax return, submitted tax return, right? Due dates and all. Then I will discuss those things. So, but I can't promise you guys. So I will not. I will not able to. I will not be able to discuss all the questions within the given time frame because the 2 hour. So therefore, then I will not guaranteed I will discuss everything. There are other things. List 3 transaction liable for the stamp duty. List out the method of the adapts to the pay stamp duties. There are 3 methods now. So you can affix in the stamps. Otherwise, you can pay to the particular bank, that the VOC counter, or else you can pay that as an cumulative, right? Cumulative stamp duty. There you can pay in a 3-way. So section number 3 is the kind of the case law, that is the Mahavitarana case, right? You can see the tax administration work are very important for the compliance and such things. Then the section number 2, it is a particular question relevant to the VAT admin part. Then section number 1 is in this case, right? Kind of the important introduction part, right? Not the in residence, but in your exam, this not, please don't think this paper is that means the target area. So, but here the most important area I will discuss, right? Don't think this question paper as a target area, right? So this is not a target paper, right? So because the question number 1, definitely it will be a residence status. So then please let me know what are the area that I need to focus in this seminar. So please let me know, then I will accept your request. So you can chat, and if you are not like to speak, so you can send me a message. Send me a message. That means that you can send your preference to the chat. Then I will try to do the majority. I will give chance to majority. So which question you need? Which questions? So is that okay to discuss the question number 9 and 8, because it will cover 50 marks, 8 and 9. With that, I will do another 3 questions. So is that okay, students? Please send your preference. Right, because the most of the students are worrying about the tax rate and the changes. What are the changes in the tax rate in the company? Likewise, then what are the new changes in the individuals? But please make sure then today I got the message from the AAT as well. Don't worry, the recent changes, right? Recent changes for the VAT and all. Don't worry, because those recent changes are not tested in your exam. But the tax changes, the which already testing the last exam, that means the 2023 August or September, August or September exam, definitely all those changes will apply in this exam this time as well. Therefore, so then I will discuss one by one here. So I will start with the question number 9. Then Kavisha is started. Kavisha, right? The Kavisha is a chartered engineer attached to the leading in construction company Sri Lanka. As a site engineer, he has given a following information for the year rough assessment 2022 and 2023. So what do you mean by the year of assessment? First of all, you have to know that the year of assessment in the sense any consecutive 12 months which start from the 1st April in this particular end with the next year 31st March. So that is the meaning of the year of assessment. So in your exam, then the examiner will test the year of assessment 2022 and 2023. So in this case, you received the income from the employment. You know the income from the employment. Basically, you need to do the calculation under the cash basis. Right? When you receive the income in cash, then you have to recognize that as an income, right? That is a very important thing. So here the gross salary per month given 300,000. Then you have to take the gross salary as a part of the employment income. So this is the per month. Then to get the for the year of assessment, what you need to do is you need to multiply it by 12. Right? The arrears salary for the year 21 and 2022 received during the, then here there should be a small adjustment 2022 and 2023. There is a small correction, right? So arrears salary for the year 2021 and 2022 received during 2022 and 2023 300,000. So this amount received in 2022 2023, that means the year of assessment which we are going to calculate the employment income. So but this 300,000 is not a salary which receivable in this period. That means the last year, the previous year of assessment. However, then I told you that at the beginning, the employment income need to be calculated under the cash basis. If there is a cash basis, whatever the amount received during the period, it doesn't matter whether that is applicable in the previous year or the next year, you should take that as an part of employment. So the company has provided him a car with fuel, right? The car with fuel. Now you should know if the car is provided. The now rule is the irrespective of the capacity, right? Irrespective of the capacity, you should take the value of the provide vehicle as per the guideline given by the Inland Revenue Department. Right. So there was a small network issue with the cellular call, right? So then right now you can see, ne? Yes. I hope you can hear properly. Yes, yes, yes. Okay. So then you can see the company provide the car. So if provide car irrespective of the capacity of the vehicle, for car per month the value is 20,000. If provide the fuel, there is another additional 20,000 altogether. How much? 40,000 per month into 2. There is the value, right? So if additionally provide the driver, for driver, then you should add another 10,000 per month. The earlier mean the before 1st October 2022, there was another scenario. Therefore, those scenario not applicable now. So the previously there was a condition whether the engine capacity exceed 1,800 cco, below that. So those kind of the conditions are not applicable in the current situation, right? So his son school fees paid by the company 180,000 for the year. So what would you think about that? That means the 180,000 the son's fee paid by the company. That is a benefit to the organization. Sorry, particular employee Kavisha, because if the employee is not work in the company will not pay that 180,000 school fee of the particular son. That means the particular employee's son. So therefore, this 180,000 received because of the employment. If something received in respect of the employment, that should be taken as an employment income. So the medical benefit received in the common scheme operated by the company is 300,000 in the common scheme. This the common scheme mean it will that mean the reflect what? That mean in simply there is a equal condition for all employees regarding the medical. If there is the equal terms, that in the equal conditions, so if there is a reimbursement, medical, dental or health insurance, if there is a common scheme or the equal permanent employees, that means that should be excluded. It should not be taken as an employment income. In this case, this even though this 300 is a benefit, so this is a common scheme. Therefore, this should not be taken. If there is an information like this, there is no common platform or the scheme or the mechanism to provide this kind of the benefit for all the full-time employees in equal manner, right? That means simply you are not eligible to exclude this 300,000. Therefore, that 300,000 you need to take as an employment income. But in this situation, this case, in the question, medical benefit received from the common scheme mean all employees are get this same benefit without any discrimination, right? Therefore, this 300,000 should be excluded from the employment income. So then the APIT deducted by the company with the constant of consent, right? I had a mistake, right? The consent. So in the consent, so the earlier there was a condition like to deduct the APIT, the consent of the employee should be there, but now that means after 1st January 2023 onward, the consent of the employee is not required. The consent of the employee is not required to deduct the APIT. If the employee salary, the gross salary is increased more than 100,000 per month, all the employees need to pay this APIT. Actually, the employee no need to pay. Employer are responsible to deduct the particular APIT amount and remit it to the Inland Revenue Department. So in the exam there is some point, can testable point is what are the responsibilities of the employer to deduct this APIT and all, right? Okay. So what is the application of this? The APIT, you know, if there is any paid APIT, simply you can do what you can do simply. So this paid APIT, you can deduct as an what? You can deduct as an tax credit. Paid APIT, you can deduct that as an tax credit. So tax credit. So there is no any other application for you guys. Then examiner never asked to calculate the APIT. So then simply those are the application of the APIT. Then he received a share of profit from a partnership where he also was a partnership during the year 2.3 million. On this applicable partnership tax credit available for Kavish is how much? 108. So because you know the partnership need to pay tax separately, then the paid partnership tax should be distributed among the partners based on some mechanisms. Then I will not going to discuss that mechanism here because then after that in the recent years they are not test that kind of the distribution among the partners and all. They just ask to calculate the tax liability of particular partnership. So however the tax credit available for Kavish from the partnership is 108. So this 108, what you can do is that also tax credit. There is a tax credit. So this is the partnership. So share of profit is 2.3. In addition to that, he owns an electric shop also. Electric shop. This is a kind of the business income. Business income. So there is another business as well. Electric shop. The income statement of that the business for the year of S1 2022 and 2023 given below. The income is given. The purchase not a start salary, that is a staff salary. That is a staff salary. Not a start salary, staff salary. To calculate this income, you know, you have to apply section 10, 11, 12, 13, 14, 15, 16, 17, 18 and 19. So that is a business income, right? You know. So as per section 11, the staff salary is incurred for the production of the business income. Therefore, that is allowed. Allow mean you can deduct that as an expense under the taxation as well. In this case, you can see the staff salary already deducted. When you calculate this net profit, then these are the expenses they are deduct. So any expense disallow as per the taxation, you have to add back. So you can see the rent. So we'll see the what is the application of the rent. Then electricity, water, telephone, other expenses, depreciation, donation, net profit. So you know the electricity, water, telephone, other expenses are normally general expense need to incur to continue the business day-to-day activities. So the depreciation, you know, as per the section 16, depreciation is not allowed. Instead of that, the depreciation, you can calculate the capital allowance and you can deduct the capital allowance from the net profit. So then hope I'm not too fast, right? So because then this is an revision, this is not an class. Don't misunderstand. So because here you are to recap everything or refresh your knowledge. So here no one there to learn from the beginning. Therefore, they don't expect that kind of depth discussion here, right? I will not going to discuss deeply some of the factors because you already know. Here I am what I am is I am doing here the recap all the part and also give some answers for your questions. But unfortunately, no one responds and no one asks the questions. Right? I'm then available for you guys to provide the answer for your questions. Right? That is the main purpose of doing this kind of session today. Right? So not to discuss these the questions actually. Then I will discuss this. However, but the main purpose was to give the solution for your some questions. So here donations. Here the donation also not a part of business income productions. That means the donation are not contribute to production of the business income. Therefore, you are not supposed to deduct this as an expense. But you can see if this donation made to approved charity or the given institute to given a list by the Inland Revenue Department, the Commissioner General. So you can get this donation as an qualifying payment under the section 52. So we'll see. So the computer purchase in 20 and 2021 cost of 800,000 was there in the business. There are no other asset to claim the capital allowance. That means the depreciation 200,000 claim for this computer. Therefore, simply you can calculate the capital allowance for the computer. You know the capital allowance simply in the for the tax purpose. For the accounting, you know the depreciation you can calculate as per the LK 16. But for the taxation, those accounting depreciation is not allowed. Therefore, you have to add back. And instead of that, you can calculate the capital allowances. When you calculate the capital allowances in accounting, there are some different method of calculate the depreciation. You know the reducing balancing method is straight line or the cost on cost method, or the other one is the production unit method. There are many, but not many, right? There are few. But in taxation, there is only one method. The you have to use the straight line method. So and also there is another thing you have to keep in mind for tax purpose. If you purchase some asset during the year, irrespective of the date of the purchase, you have to get the capital allowance for whole year, right? Other important thing is if some asset dispose or sell, remove during the year, you know that asset are not eligible to get the capital allowances for that particular year as a whole, right? Irrespective of the date of the purchase. So then hope you guys are already aware about these things under section 60. Section 60. So the Kavisha rented his part of residence to the business. Monthly rent is 6,000, no repair. So that's what to a business, right? This kind of the rent income. So you know for rent, that is an investment income. So normally then, but there should be some important point under the rent and the interest and all, because if that rent and interest, even though that is the investment income, make sure if that income, effectively connected with the business, you are not supposed to categorize those rent and the interest income as an investment. You have to consider that as an business income. So normally rent and the interest is a investment. But if that is effectively connected with the business, that should be a business income, right? So you have to keep in mind those things. So other one is he has fixed deposit in a bank, but the rate paid is 60. The rate paid is you can deduct that as an expense under the investment income. So he has fixed deposit in bank. On that gross interest received for the year is 360. The relevant withholding tax deducted. So what is the relevant withholding tax for the interest? What is the relevant withholding tax? Please let me know. What is the applicable withholding tax rate? WHD rate. So anyone, you can send a message that in the chat. Yes, 5%. 5%. That 5% is not a final one, right? Not a final one. So what is the particular withholding tax rate for dividend? Then what is the withholding tax rate for dividend? Dividend? Dividend, anyone? For dividend? No one. Anyone in the session? Please tell me. What is the applicable withholding tax rate? 15. Yes, 15%. If you receive any dividend after deducting withholding tax, that means if you receive the net dividend, if you receive net dividend, simply that dividend is that means that withholding tax paid on dividend is not a normal withholding tax. There is a final withholding tax. There is a final. That is fine. But the withholding tax on the interest, withholding tax on the rent is not final tax. Those are not final. So therefore, the 5% withholding tax already paid on this 360 is not a final. If it is not a final withholding tax, what is the adjustment? That means the paid withholding tax should be considered as a tax credit. And the particular income should be added to the investment income as gross. As gross. So then the commission made the following expenses. So regarding this donation, this is not an approved category, therefore this is not come under the section 52. However, there are two donation. COVID fund, the government 100,000, if it is a COVID fund, Nafi fund, the Sarana fund, then a kidney fund, or the in government school, or any government hospital, or any government institution, or universities, any kind of government institute or the government approved fund, if you made any donation in form of cash or other mean goods, there is no restriction. You can deduct the total amount as an donation under the section 52. But donation to approved charity, it is only allowed to deduct in the cash. If it is a good, the goods are not allowed. But in this case, 100,000 paid, but there is a restrictions. What is that limit? there is a maximum limit. Right? You can only deduct the lower value of actual donation or 75,000 or one third of taxable income. So at the end we have to calculate it, right? However, the 75,000 is the limit. Therefore, this 100,000 is never allowed to deduct as an total amount. So we'll see that. Then you are supposed to calculate the assets, the taxable income, the gross tax liability, the balance tax liability, and exempt income if any. So if there is an exempt income, you should mention it. Otherwise, you will not receive the total marks or the allocated marks. So then now we can discuss that mean the answer, right? So then now we have already discussed the important area. Then I will quickly calculate the answer. Question number 9. So this is the structure. So if you have any question, you can ask. Right? So Mr. Kavisha, calculation of income tax liability for the year of assessment 2022 and 2023. Then I will do this question as rupees in thousand. You can use. So as per the Inland Railway Act number 24 of 2017, there are 4 source of income, right? So employment income for individual or person. Other one is business, in this case applicable. Other one is the investment. There was 2 investment income and other. So in this case, there was no any other, but I have got the other income in the structure. The total assessable income. So from the total assessable income, you can deduct the section 52. If there is any qualifying payment and relief. So we'll keep some space. If there is in this qualifying payment and relief, then we can do the adjustment. So then you can calculate taxable income. Based on the taxable income, you can calculate gross tax liability. Then you can deduct tax credit available. So then you can calculate balance tax payable. So then here there is no enough space to calculate this employment income. Therefore, you need to calculate those things in a separate note. Employment income. Then note 2. Business income. Note 3. There was investment income. So I will start with the employment income. Here there was gross salary per month. It was 300, the rupees in thousand, then 3,600. Here you can remember. And arrears salary received during the year of assessment, the 300 should be taken. Even though that salary relevant to the previous year of assessment, then received in this year of assessment, therefore received here should take as an income, right? So in this case, the company has provided him a car with fuel, right? So vehicle benefit. So vehicle benefit, for car 20,000, fuel 20,000 altogether. 40 into 12, how many years? Sorry, how many months? 12 months. So 40 into 12, 480,000. The rupees in thousand, right? You can understand that. Then son's school fee that is paid by the company, that is an benefit, therefore that should be taken as employment income. Son's school fee. Then other one, as I remember, the medical bill reimbursement. So that should be excluded. That should be excluded. The reason is there is a common scheme. The reason should be write down. Otherwise, you will not receive the particular marks. So the APIT payment made during the year is 36,000. So what is the application? The APIT is a tax credit. So APIT paid should be considered as a tax credit when you calculate the balance tax payable from the gross tax liability. So now that is the only application of the employment income. Here you can get the assessable income from employment. Then what is the value? Of 4,560. 4,560. That 4,560 should be the employment income. So then we can discuss the business income. So this is the structure. So here profit before tax. In this case, the profit before tax means the net profit. The net profit given here 1,551. 1,551 rupees in thousand. Right. So when you calculate this 1,551, these expenses, staff rent, staff salary, rent, electricity, water, telephone, other expenses are allowed. But guys, the depreciation is not allowed. So the depreciation you need to add back, but instead of that, you can calculate the capital allowance. So the depreciation given, how much? 200,000. You already deduct this 200,000 when you calculate this 1,551 profit. So the capital allowance, you can get the information given. A computer purchase in 2021, the cost of 800 is the only applicable asset which eligible to get the capital allowance. So 800, this asset purchase after 1st April 2018, that means the computer, that means there is a 20%. 20% means 5 years. Then you purchase this asset in 20 and 2021, right? 20 and 21, 21 and 22, 22 and 23. Now you are in there. Already you have taken 2. Then this third year, then you can take the capital allowance for another 2 years, because total capital allowance only you can get for 5 years, because that is 20%. So here you can see the 80, 160. That 160 you can deduct as an expense. So then the donation also not allowed. The donation is not allowed as per the section 11. The donation is how much? When you calculate this 1551, you have already deduct this 50 as a donation expense. So that is not allowed. Therefore, you have to add back. Then that's all. So you can take the value here 160. Here total 1801. So 1641. So this is the assessable income from business. Here I forget to add something, right? And so you need to add profit from a profit share of partnership. There was a profit share from the partnership as well. You can remember. Then how much? 2000. Then this was missed, right? That's why 2.3 million, 2300. So altogether you have to take. Then here you can see 3941. So the total that income we called as what? Assessable income from business. The total assessable income from the business is 3941. 3941. Right. So in that case, you can see there was 108 tax credit available from the partnership. 108 partnership tax credit, which distribute to the Kavisha. So Kavisha rented his part of the residence. There is a investment income. So we have to go to the investment income in, so rent income. So under that rent income, we can calculate the gross rent. So gross rent is how much per month? 60. Then altogether 720. You can deduct any relevant direct expenses which incurred to earn this rent income. So here you can see the rates paid 60. So therefore these rates you can deduct. So in this case, then you know there is no any repair cost. Even though the repair cost is not there, then you can take the special qualifying payment. That means 25% allowance on rent. Then how much the rent? Then here rent is 720. So 720 into 25%. That is only applicable for individual. So 180. You have to do that adjustment. There is no any information regarding that. There is a hidden information, right? There is no any information to do that. So then there is the interest, FD interest. The gross interest you need to take gross value, right? If they given the examiner given the net, you need to convert into the gross and you need to add it to investment income. However they have given the information, the relevant withholding tax deducted. That means 5% already paid. 360 into 5% mean that is 18,000 you have already paid. However, you have to add it gross value to the investment income and pay withholding tax on the interest. You need to deduct as an tax credit, right? Tax credit. So with that part, we can complete the adjustment number 5 and 6. The Kavisha made some donation. So donation, that should be come under the section 52. So under the donation, if the donation made to government institute or whatever the prescribed institute, what we have explained earlier. So those the institute, that means the donation to COVID-19 fund, that is the government funds. Therefore, that 1,100 you can deduct without any restrictions. The COVID-19 fund is a prescribed institute, that means the prescribed fund. Therefore, that is allowed. Then here the charitable institute, the approved charity, which provide care to needy people, 100,000. But you are not supposed to deduct that 100,000 as a whole, because there is a restrictions. So what is the restrictions? Students, keep in mind the actual or the real cash donation, only cash. If that donation is a good, that is not allowed, right? Doesn't matter. Don't think about anything, right? Don't think anything, right? You can disallow it, right? So here the cash, the maximum level is 75,000 or 1/3 of the taxable income. Here, then we have to here charitable institute to calculate that. Guys, we have to calculate this assessable income. Therefore, please put a strict mark and 100 here. So now you can calculate the total assessable income 4,560 plus 3,941. So altogether, so investment income we took employment investment not yet took. So that's all the employment. Sorry, you can take the assessable income from employment. So how much? 1,020. So how much the total now? 4,560 plus 3,941 plus 1,020, altogether 9,521. So here, even though they are given the instruction or not, then you can deduct the personal tax relief. That information never given in the question. Tax relief. So 1.2 million now, not 3 million, right? So the earlier it was 3 million, now 1.2, right? So this is the new one. So 1.2, 1,200 plus 1,180 plus. So 100. Then you can see the 1,480. The approximately 1/3 of the total assessable income. 9,521 divided by 3 is 3 million something. Now you know what is the lower value? 3 million no, 100,000 no, 75. Therefore, obviously there is 75. Therefore, you can deduct the 75 as an charitable institute donation to charitable institute. So altogether 1,200 plus 180 plus 100 plus 75. So altogether 1,555. So 9,521 minus answer. So you can see the 7,966 is the taxable income. Now you need to calculate the gross tax liability. So we need to do some working to calculate that. There is no any other information. So here working, then I will do the working one. The gross tax liability. So the gross tax liability. So how you can calculate the gross tax liability is based on the taxable income. The taxable income is how much? 7,966. So the 7,966, then how you can calculate? On that taxable income, you have to check whether is there any capital gain. Is there any gain from the realization of the investment asset? There was no. There was no. Therefore, don't think about that. If there was capital gain, you have to tax at 10%. 10%. So if there is a 10% applicable, the capital gain. So no, in this case, no. So then you have to check whether 40%. gain from liquor and tobacco. Gain from liquor, tobacco, betting and gambling. So in this case, no. Then that is what the balance taxable income. Balance taxable income. So the balance taxable income is the whole income in this case, 9,966. So this balance taxable income, this the way. The earlier it was first 3 million, next 3 million, likewise. But now there is no such conditions. Now the bucket is 500. First 500 you need to 500 mean 500,000 rupees in thousand here, right? So that's why I am not used the last 3 digits. So 6%. So next 500, 12%, like that you can go in the 500 bucket up to 2.5 million, 18%. So next 500, so 24%. So likewise the next 500, so 30%. So altogether, 2.5 million. That means 2.5 million. So total taxable income is how much? 7,966. 7,966 minus 2,500. The balance is how much? 5,466. That is the balance. So balance. So on the balance should be taxed at 36%.
Sir, can you re-explain it, please?
So which part, Puda? Yes,
How
of
you
course.
got the
Which?
balance?
Got the balance. Then you know the total taxable income available 7,966 ne? Like 6%, 12%, 8%, 18%, 24% and 30% you can tax up to 2.5 million. Did you get that? Total up to 30%, you got 500,000 bucket. The 500 into 5, that means 2.5 million. 2.5 million, you have already taxed at 6, 12, 18, 24 and 30 different tax rate. Clear or not clear? The after the 30%, that means 2.5 million taxable income, the on balance, total on balance should be taxed at 36. On balance, how you can get? 7,966 minus 2,500. Did you get that?
Yes, sir.
Very simple. So this the way of calculate this thing. Now here you can see 1,967.76. So total tax liability is how much? 2,417.76 rupees in thousand. That's the total taxable income. Sorry, total tax liability. 2,417.76. So here the available tax rate, now you can see 36,010 and 180, 462. So you can see the balance taxable in balance tax liability 2,255.76. So this is the balance tax payable. So any doubt? What we have discussed so far, now you can, I will give you 1 minute or 2 minutes. You can ask any questions. Any doubt you can ask now.
So can you show the workings for the business income part?
Sure. Can you see? Then I will share. I will share this the calculation with you guys, right? Then I will share this answer to the vLearning management team. Then they will definitely share with you. Clear?
Sir,
Yes, Putra.
the capital allowance part, I didn't get that.
Didn't get that. So,
Yeah.
are you aware about the capital gain? The way of calculate the capital gain?
Uh,
Yes or no?
uh, no, sir.
Otherwise, how I can explain it? So there was a income called the capital gain, right? There was a capital gain income under the investment income. I will discuss that part then with the available time permit. Then I don't know whether that is possible or not. So, however, if there is any capital gain, that means the income, the gain from the realization of the investment asset, that income need to be taxed separately at 10%. You need to get you need to get the capital gain out of the taxable income, and that need to tax at 10%. Clear? That is the application. So in this case, there was no capital gain. That's why I not apply that 10%. Clear then?
So what is the 20% then?
Sorry?
20%, like the capital allowance, we have 800 into 20%. So what is the 20%?
I didn't get that. 20% mean?
Yeah, I was asking the same thing. 20. How we get the 20%?
20%?
So in the business income part, we have
In the
found the
business,
capital allowance.
that is a capital allowance, not capital gain. Go. How good that is
Yes,
20%?
yeah,
20%. Isn't it?
Yeah,
yes.
Then you also ask that question, Buddha.
yeah,
Okay, then this 20, then I understood that as a capital gain, right? So capital allowance, the capital allowance part, this rate is I got because for computer, the Inland Revenue Act number 24 2017 is specifically given the number of useful, that means the number of years which that asset can use. That is a useful lifetime given. For computer, any computer purchased after 1st April 2018, for number of years, that means useful year, 5 years. The 5 years mean 20%. Then how you can convert 5 year mean 100 divided by 5, then it convert 20%. If it is a 10 years, then 100 divided by 10, so 10%. That is not an tax, this is an accounting, right? Did you get that? So these rates are not given in your exam paper, then you have to keep in mind. So the building 20 years 5%, the milking machinery 2 years 50%, and intangible asset other than the goodwill, if you know the exact definite useful lifetime, you have to use it. Otherwise, if you don't know the definite useful lifetime, at that time the 20 years 5%, other than intangible and the milking machinery and building, all other asset 5 years 20%. So you can refer the particular that means the act, Inland Revenue Act number 24 of 2017, and you can see the fourth schedule with the amendment, right? You have to refer the amendment. Did you get that? So,
Yes, sir. Thank you.
okay, then you have to be very thorough. That means the way about this thing right now. So did you then is you purchase that mean did you purchase the vLearning package or
We
join with
purchased
us? Huh? Sorry for that?
it was the vLearning package, sir.
Okay, then here then should discuss this thing, ne? Right. Okay. So however, there is the application. Right. So any doubt other than that regarding the individual tax calculation? So please make sure go through the capital gain calculation, right? Capital gain එක ගැන කරන්න මේ calculation එක බලාගෙන යන්න. Please go through the capital gain, not capital allowance, capital gain. And also under the section 16 way of calculate the disposal gain or loss for tax purpose. That means assessable charge or balance in allowance. So you have to. Right. Okay. This is the end of the discussion of the that the individual taxation. So do you want section number 8 or wet part? The time is not for me to discuss everything. What is the most important area for you? With your request, I will do VAT or company tax. Quickly.
That part, sir.
VAT. One student is request VAT. So others, then I will give chance to. So one student asks, the insurance premium paid is allowed or disallowed? Is there any insurance? Insurance part at there was no any insurance. So I don't know what you are referring. Is there an insurance premium? So that student, what you ask? That I don't know. If you are silent, then I can't help you, right? Right. Okay, then, however, in this case, Puta, then I hope it is important to discuss the question number 8. Right? Question number 8. Because there is a kind of important question that means the 25 marks. So then I will do that, right? Then I will try to do the wet part as your request, right? So we'll try. So we have another 30 minutes approximately, right? Right. So then I will start the question number 8. Then I will share these calculations with you. Don't worry about the. Don't try to keep the notes regarding these the calculations. Then I will share. So I hope then you already paid for this, and Miss Nadisha, then hopefully this recording will provide to the student, isn't it?
Yes, sir.
Okay. Thank you. So you can refer the recording again and again. Then I don't know what is the expiry date, right? However, so the normally in a team, as I know, the 20 days is valid. Then you can get the vLearning from the you help from the our vLearning support the very Support from our vLearning staff, right? The management. So this is the structure. There are many differences when calculate the company tax, right? You know. So for the company, you should keep in mind, for company there is no employment income, so you cannot apply the employment income for the entity. So here business income. Investment income and other. Then qualifying payment and relief. Then keep some space, then you can calculate, no need much, right? In this case, like that individual, there is no many. So taxable income, total taxable income. Once you calculate the taxable income, you can get the gross tax liability. Then you can deduct the tax credit. So this the business income calculation. Then you can get the note 2 if there is an investment income. So you can do that. So likewise, then we'll read the questions very carefully. The following information extract from the financial statement of 31st March 2023. The net profit before tax for the year ended 31st March 2023 is given as 81,341. 81,341.4. Right? Sorry, I had a mistake here. Rupees in thousand, right? So here profit before tax 81,341.4. The other income includes the above. Then when they calculate this 81,341.4, this income already included the rent income from investment property. So that is investment income. So interest income on FD, that is the gross, that also investment income. Profit from on the disposal of the machinery. Normally this is a business income, but we have to remove because this is not an the way of calculate the gain from the tax purpose. This accounting profit. Therefore, that accounting profit you have to remove from the profit already calculated, and then you have to calculate the disposal gain or loss as per taxation. So we'll do that, right? Then we'll see how we can do that. So here there is a rent income. There is an investment. Therefore, we have to remove it. So 1.8 million. So we'll see 1.8 million. 7,800. So not only that. So 1 million interest income on FD gross. Okay. That's interest also. We have to remove. So not only that, we have to remove the 665 disposal gain, because all these income already included in this 81,341.4. That's why we need to remove. So disposal gain. So for this disposal gain, we have to calculate the work in one. So what is the disposal gain for tax purpose? So we have to go to this property, that means the property, plant and the equipment on 31st March 2023. So estimate useful the computer software 4 years and all this information. Right? A machinery purchase in 1920 for 2.75 million disposed during the year 2.36 million. On this transaction, the accounting profit adjusted to the profit before tax. Yes, that is the accounting profit. So here you can take sales consideration. This is the way you can calculate profit for tax purpose. I told you have to be very careful how to calculate this loss or gain for tax purpose as per section 16. Now you can learn that. So from that you can deduct tax written down value. Tax written down value. How you can calculate the tax written down value? First, minus accumulated capital allowance. Capital allowance. So now you know they have given some information. We have to use those information to cost is selling price is how much during the year for 2.36 million. 36, right? So cost is how much given 2,750. So how you can get the accumulated depreciation? Not depreciation, capital allowance. When they have purchased this 1920. So now you know the with the asset purchase you have to get the capital allowance for all year, but the year which asset is going to dispose, you are not supposed to get the capital allowances. The accumulated mean the total, the how much the cumulative value. So 1920 you have to get the capital allowance, 21 and 2021, 21 and 22, but you are not supposed to get, you cannot get the 22 and 2023 because that is the year which this machine is going to dispose. Therefore, the disposed year you are not eligible to get the capital allowance. According to that, so how you can get, you know, the straight line method. So what is the applicable capital allowance rate? What is the applicable capital allowance rate? If that asset purchase after 1st April 2018, that means the machinery, you know, there is a 5 useful lifetime is 5. So you can calculate the cumulative things like this: 2,750 divided by 5 and multiplied by 3. Or you can multiply 20% on that and 3. So 20% mean 5 years, right? In simply. So 2,750 into 20% into 3 mean for not 4, right? Because the 2022 and 2023 we cannot get the capital allowances. So 1,650. So 1,650 is the cumulative capital allowances. 2,750 minus the 1,060. 1,100 is the tax down value. So you sold this asset at 2,360. So there is a gain to 1,260. That is for tax purpose. That if there is a gain for tax purpose, we call it as what? Assessable charge. If there is a loss, there is a balancing allowance. If this is a gain, so you have to add in here assessable charge, work in one. So 1,260 you have to add it to the profit. Right. Now we can complete that part. Right. So here we have complete these things. So admin and establishment expense include the following. That means when you calculate this 81,341.4, this kind of expense you have already deduct. Therefore, the depreciation charge for the year is 6,320. So you are not supposed 6,320. You are not allowed to deduct. Therefore, you have to add back. But instead of that, you can get what? Capital allowance. So you can get the capital allowance. So available asset which eligible to get the capital allowances in the section they have given like this, right? These are the things. So here simply we can do the separate working. So investment property, land is investment property. Therefore, I will do the calculation here, right? But you have to do separately, right? Then you can do the calculation separately because it is time consuming. Therefore, I will not do it separately here. This is not an depreciable asset, therefore not eligible because this is investment asset. If it is investment, the depreciation is that the capital allowance is not eligible. The capital allowance only can get for claim for depreciable asset. So the building 2, which was purchased 1920, so this applicable rate is what? 5% to 20 years. So 5% mean 410. So car used by the director not eligible. Why? Because that is not an depreciable asset. The car used by the director is not for the purpose of the business. That means there is a traveling. Therefore, it will not contribute to production of the business income. Therefore, there is not an depreciable asset. Transport lorry, which was purchased after 1st April 2018. So here 20% rate, right? So here 20% means 1,600. So the machinery also 20%. So 6,700 into 20% mean 1,340. So the computer also you know the 20%, right? 1,250 into 20% mean 250. So and the computer software, that regarding the computer software, the useful lifetime is now as 4 year. If it is 4 year, you know that is a 25%. The 4 year, how you can convert to the rate? 4 year mean 100 divided by 4. This is 25%. Otherwise, you can divide by 4. Right? You can divide by 4 multiplied by 25. Whatever the easy method, right? Here in this way, right? So 1,950 divided by 4, then 487.5. So if you don't know the exact useful lifetime of the software or the intangible is the software, you know. Then you are very well aware about the accounting standard called the LKS 38, intangible assets. So here you know those things, right? So the total total capital allowance is here 250 plus, 1,340 plus, 1,600 plus, 410. So here 4,087,500. 4,087,500. So this is total capital allowance. Right? Then here this is the working, right? So I will not use separately. So same place I use. So total is how much? So you can deduct that as an expense. So 4,087,500. So after that you can see the donation to COVID-19 fund 1,420. 1,420 is not allowed for the donation. Therefore, add back. And same time you can go to the tax qualifying payment. The donation to whom? COVID-19 fund. So that is allowed 1,420 without any restriction, either cash or goods. There is no restriction maximum limit. The foreign traveling expenses by the director to meet the foreign customer. Is that allowed? Yes. The foreign traveling. There are two. To meet customer, that is allowed because there is a business purpose. But the private traveling is not allowed. Therefore, that 2,150 is add back. 2,150 is add back. So the provision for the gratuity, the gratuity provision, any provision made for the future expenses are not allowed as per the section 10. You can refer the section 10 and you can see 7,080. But if there is an actual gratuity paid, you can deduct that as an expense. We'll see is there any gratuity paid. If there was a gratuity paid, you can deduct that. Repair expenditure on the rented property, my dear students, if that rented property, that repair expenditure is not relevant to the business income calculation. That means if you incurred that 97,000 for the investment income, so you can deduct that repair expense from the rent income, not from the business. Therefore, that repair expense you can remove from here. That means you have to add back and you can deduct from the investment income. Here, please put a star mark and keep in mind to deduct from calculation of the rent income. So the selling and distribution expenses, the bad debts charge, but not bad debits. It's bad debts charge on trade debts. Here the trade debtors, right? It should be trade debtors, bad debts, and the staff loan write-off. The staff loan write-off is not allowed, but the actual bad debt is allowed if they already taken the reasonable action to recover it. However, my dear students, if there is any special provision of the general provision for the doubtful debt, that is not allowed. So the bad debts under that trade debtor, that is allowed, but staff loan, that is not allowed. Therefore, you have to add back 380. So then the foreign advertisement expenditure, in this case, we have to assume that that advertisement expenditure is allowed. That means allow for the calculation, because that expenditure is incurred for the production of the business income. If there is some such situation, you can assume that you can do that with the assumption here. If that advertisement expenditure incurred for other purpose, they will definitely tell that. They definitely will give that, right? So that is advertisement. That is allowed. But my dear students, the advertisement and the communication expense, they have given a special section now, 15A. As per the 15A, if that advertisement expense incurred in the locally, then you can have an additional 100%. Additional 100% deductions. But in this case, you can't get the additional deduction. Why? This is foreign. If there is a foreign, you are not eligible to get. So guys, if there is an entertainment as per the section 10, so section 10, then you are not supposed to get any deduct any entertainment. Therefore, once you see the entertainment for any purpose, for any person, that entertainment expense is not allowed. Therefore, you have to add back. So the finance expense include the followings, right? So when you get the finance, so section 12 and section 18 you have to apply. So section 12, the company bank OD. Bank OD is taken for the day-to-day activities, but the director's housing loan interest is not allowed. So therefore, that 710 you have to add back. Interest, housing loan, but you can deduct this OD, even though the OD is allowable. Then if that allowable under the section 12, if that interest incurred for the production of the business income, it's normally allowed under the section 12. If the expense is allowed under the section 12, you have to use the section 18 to calculate the maximum level of allowable finance cost. How you can calculate maximum limit of finance cost? How? Finance cost allowed under section 12 divide by loan balance into 4 into equity. As a equity, you have to get the share capital plus all reserves, but excluding revaluation reserve. To calculate this limit, how they provide the information? Then as I see, they have nothing provided about this information. Therefore, you cannot apply section 18 in this case. Therefore, the other finance cost, that means OD. So you have to consider that as an allow. That means That's total is allowed, because you cannot calculate this the maximum. If with this maximum limit, if there is any uh, disallowable finance cost, you have to add back as well. The same time, you have to keep in mind the disallowable finance cost you can deduct in future 6 years with these limitations. So that's all. So the relevant withholding tax of the interest has been deducted. So we'll consider when we calculate the investment income, the following additional information we have already taken. So the gratuity paid is there. So how much? 1,450. That is a special expense only allowed for the tax purpose, because the accounting they are not doing the not recognize the expenses under the cash basis. So this gratuity paid not deduct under the accounting, but that for the tax purpose that is allowed. For tax losses brought forward, tax losses from the previous year, you know that this is the section application of the section 19. Section 19 said that if there is a brought forward tax loss from the previous 6 years, right? Any loss from the previous 6 years you can deduct. So this is the previous year. Therefore, you can deduct this as an expense. So this should be added. That should be adjusted at the end of the calculation of the business income. The self-assessment income tax payment is 6 million. That is a tax credit. So under the tax credit, installment paid 6 million. Right. With that part, then we can go to the investment income. So there are two investment income was there. Can you remember? So rent income. So rent income. So how much the total rent income? In this case, 1,800. So from that, you have to keep in mind, you can deduct the repair expense. So that can you remember the repair expenses which is not allowed under the business income? You can deduct from here. 1,800 minus 97, you can simply 1,703. But don't think that previous question, can you remember? There was a special deduction on 25% allowance on the rent under the qualifying payment, but for the entity, that company, the that is not applicable. That is only applicable for the individual. At that time, I told that, right? So here, interest expense also, income also there. The gross interest income you need to take 1 million. So, however, they have given the relevant withholding tax on this 1 million already paid. So, that withholding tax on interest, the paid amount. So, 1 million into 5% is 50. You have to deduct from the tax credit. That is a 50, right? So, all the information has been taken. Other than the brought forward tax loss, we have to adjust it. Brought forward tax loss, ne? And repair expenditure. Now, then I put a 2-star mark because we have considered it when calculating the investment income. So that's all. So we can calculate the business income. You can get the sum right here, the plus and minus side. So let's get the total of the minus side. 1,800 plus 1,000 plus 665 plus 40,087.5. 1,450. So altogether 9,002.5. Then we can get the plus side 81,341.4 plus 1,260 plus 6,320 plus 1,420 plus 2,150 plus 780 plus 97 plus 380 plus 750 plus 710. Right, that's all. So 95,208.4. So you can deduct this 9,002.5 from this value. So here 86,205.9. So here now there is ample enough tax profit to deduct the brought forward tax loss from the previous year. Then why we need to adjust at the end? Because we have to think whether the to deduct this brought forward tax loss of 6,850 is there any enough income from the business? If there is no enough income from the business, so you can go to the investment income and deduct. But if there is a further tax loss, then you can brought forward. So like this, here you can see you can deduct 6,850. So here 79,355.9. So this is the taxable income from business. So you can go to the calculation. Taxable income from the business 79,355.9. Same time you can go to the investment income. So 2,703. This is the assessable income from investment. So 2,073. So total you can get 82,059.9. Sorry, 58. Right, 58.9. So in this case, there is no personal tax relief like the individuals, right? For this case, only 1,420. Right. So here 80,638.9. So now the most critical area is to how you can calculate the gross tax liability. Now it's very easy. Earlier there was a 18%, 14%, like 24%, like that. Here, what you need to consider is there any 40% applicable income? That means is there any gain from liquor, tobacco, betting and gambling? Normally it will not test in your exam, right? However, if there is any the gain from the liquor, tobacco, betting and gambling in your taxable income, like in this 80,638.9, right? So you have to tax at 40%, right? If there is any capital gain, if there is the realization of investment gain from the realization of the investment asset, that means the capital gain in this 80,638.9, you have to tax at 30% normally, right? So if there is no any gain from the liquor, tobacco, betting and gambling, the total available taxable income 80,638.9. Now you can tax at 30%. There is a fixed rate now, right? Not like the earlier. Earlier it was kind of the advance. The type of the business, it will decide the rate. So now you can see, my dear students, 6,050 is the available total tax credit. So once you deduct the 6,050 from the gross tax liability, you can get then 18,141.67 as an balance tax liability. So this how you can calculate, you can apply the tax rule to calculate the company tax liability. So now you have time to ask any questions. So don't worry about the answer, then I will share with you guys, right? Don't worry, I will share it. So if you have any doubt, any questions, now you can ask. Any doubt? Any questions, vLearning students? The yesterday also I promised one students to clarify something in this session. So if you want to know something, then you can ask now. Anything?
Sir,
Yes.
the last 30% we use when finding the gross tax liability part, was it
Okay.
like the 6%, 12%, 18%
No.
one?
That
we
is only
didn't
applicable for individual. That
So to
bucket is
find the To find the balance part in company, we have to use 30%, correct?
30%. That is a flat rate, right? There is two rate, 40 and 30. 44, the gain from the liquor, tobacco, betting and gambling. If there is any gain, if there is any taxable income from betting, gambling and tobacco, liquor, then 40%. Otherwise, 30%. Clear? So first 500, 6%, next 500, 12%. That is only applicable for the individual. For partnership, you know, the on first 1 million, 0%, on balance 6%. Right? Did you get that?
Yes, sir. Thank you.
You're welcome. So any questions? Then I can help you to way of calculate the VAT if you are okay. The time is exceed.
If they give the investment income in the net, should we convert into the gross?
Yes, exactly. But then not all, right? If they given the net dividend, if it is a net dividend, that means you receive the dividend after deducting withholding tax, no? That withholding tax on the dividend is the final tax. So no need to gross and net. Just you can write down dividend income, that is final tax. You have to write down it, right? If there is a net dividend given, so in here you have to write down dividend, there is a final tax. That's enough, right? For if they are given the net interest or the net rent, you need to gross and add the gross part to the investment income, the deducted withholding tax. Like here, you can take the tax credit. Did you get that?
Yes, sir.
So any other questions? Then you are welcome to ask questions. I am here. You can use me. This is a massive opportunity for you guys. Ne? It's a live session. You can have any kind of questions. I'm ready for give any explanation. So 1 time, 2 time, 3 time, any time. If you are not understood, then you can ask again and again.
In the capital allowance, before 2017, the rates are different, right? If we
Yeah.
purchase asset from 2017, like building and all, we should calculate for 10%.
Exactly. Exactly. So you are the person who asked that question today. Yes or no? Then one of the students sent me a message and asked questions, right? So I didn't hope that kind of question will ask in your exam actually, right? So however, it is better to go through and keep in mind, right? Yeah, exactly correct. So any other questions? If you are not like to ask question directly, then you can send a message, right? Like this. The insurance premium paid, is it allowed or disallowed? I can't understand that questions still, right? The insurance premium paid, is it allowed or disallowed? So if that insurance premium paid for kind of the depreciable asset or the asset which used for the business purpose, that is normally allowed. Normally allowed. If the insurance paid for car used by the CEO, that is disallowed. So it is depend. It's depend. So I humbly request to give your valuable feedback. The link shared by the Miss Nadisha, vLearning team. So your feedback is highly valuable for us, especially for me. So that is my satisfaction. So if you get something from the today session, so you can tell that. So what is the applicable VAT rate? So applicable VAT rate is put 15%. 15%. In your question, definitely they will give it. Right? 15%. So when we disallow, are we are we to add it or deduct it? We have to add it. If that expense is disallowed, we have to add it, right? Because the in accounting they have already deduct that expense, but for the tax purpose that is disallowed. Disallowed in the sense, Puta, in accounting that expense is expense, but for tax purpose that is not an expense. Therefore, you have to add back. Clear? I hope you got it. Givanti, did you receive the answer for your question? Did you receive the answer? Right. Any other questions? Then I will quickly do the that part. Is that okay? Then I will quickly do. Actually, I have another session right in the 9:30, but I will do that part for your betterment, right? Right. Then I will do quickly these things. The JMC Consolidation Limited is a registered company for the VAT team. Then what is the registration limit for VAT? Please keep in mind. Don't apply the new rate. New threshold. The threshold is what? Per quarter 20 million, per annum 80 million, right? So what is the due date for submit the VAT return? The VAT return for some person need to submit the monthly, some person are quarterly. Who are the applicable person in monthly? The zero rate applicable persons are, that means the exporters need to submit their VAT return monthly. If the person who apply the applicable for monthly VAT return, they need to submit the VAT return on or before end of the next month. From the end of on or before the end of the next month, from the end of your particular month. So the other person who are not applying for the monthly, the quarterly need to submit their VAT return the end of the quarter on or before next month. But for the tax payment, every person need to pay monthly. The monthly payment need to made on or before 20th date of the following month. So SHCL also very important. So please go through it and make sure to get an understanding of the calculation of it. So right now I don't have time to discuss everything because this is a 2-hour session. So then I discuss the main major required part. Here then how I will do this part in quickly. So sales on export customer, the sales made to the local customer, we'll see there is no any exemption. So we can do that. So here then how we can apply that. Question number is that 7, hopefully. Yes, 7, right? Output VAT. Output VAT we can simply calculate SWAT supply. The SWAT supply, this is a nominal. So this will not received in the cash. You know that I will not going to discuss the theory here. So you are very well aware about the theory. So I will do the calculation here. So simply 15%. So total is how much? 30 million into 15%. So this is a nominal. Then you will not receive this 4.5 million rupees in cash. So it's drama. So then other supply is local manufacturers, local supply. So how much the local supply? So simply if there is export, 0%. If there is export, that should be 0%. So in this case, there is no export supply. If there is export supply, that is 0%. So here 15%. Because it should be hurry because then I don't have actually more time. So you see in this case now you have the place committed for your final exams. This is the last time that you can get the subject prize, because after that you will qualify. Then you no chance to get the subject prize for tax. That means the AAT. So total is 100. right? This total output VAT. So then from this you can, you can deduct allowable input VAT. So allowable input VAT. So in this case, you can see the paid input VAT given here. The company has paid the following input VAT. Paid kila dunno. If they given as that as an paid, don't apply 15% rate again. Don't apply. Some students are what they are doing 2.25 million into 15%. Don't do that because this is the paid one. These are the amount that they paid on that expense. Import of raw material that is allowed. How much? 2.25 million rupees, not in thousand, right? So then here on repair of the machinery, 60 years. If the machinery used for the production, you have to get that as an eligible one. But you can see the repair on traveling vehicle. If the repair is for relevant to the traveling vehicle, that is not allowed. That is not allowed because that is not for the product. That is not applicable for the production of the business unit. This is not allowed. So then total, you can get the total here. Is there any input VAT brought forward? Yes, 45,000. That also should be taken. So altogether, how much? 250. Then you can brought forward input VAT from previous quarter. How much? It was 45 as I remember. It's 45,000. So altogether, you can get the total allowable input VAT. 2,355,000. Right. You can deduct 11,315,750 minus that answer. That is 8,960,750. That is the VAT liability. So from that you can deduct regarding the SVAT here. You can see that even though the SVAT is subject to 15%, that on that SVAT you will not receive the input VAT in cash, output VAT in cash. Because in this 4.5 million you will not receive in cash. So instead of that you will receive the SVAT credit voucher. SVAT credit voucher. So if the particular company collect all the SVAT credit vouchers, you can deduct that as and and at the end of the calculation the amount. So SVAT credit vouchers has collected. Therefore, total 4.5 million you can deduct here again. Right? Simply you can deduct. Right? So then I had a mistake. I had a mistake. In addition, above sales, company used computer for 1,420. මෙතෙන්ට ගන්න ඕනේ output වෙට්ටක් තියෙනවා computer disposed 1,420,000. There is any asset disposed, then it is also subject to the VAT 1,420 into 15%. 213,000. So total is how much now? So now we also change. So now you can deduct if there is any VAT installment paid 800,000. So that also you can deduct. So now 5.3 million. So 3,873,750 is what? Balance VAT payable. Right. This is the calculation. This is the calculation. Now we can see. Question number 7. Any doubt regarding the VAT calculation? Any doubt? So with that part, my dear students, how you got some benefit. So I kindly request to give your feedback by using the feedback link. So thank you very much for participating to the session, and I wish you all the very best for your coming exam, and that you can do this. Then I wish you all the I wish you you could be able to use your full strength to get the maximum benefit in your coming exam. Not only the taxation actually, but also the all the subject in the final year. Then I'm going to wind up the discussion.